Hi everybody, Alex Ployer from Expert Forex, and it is the 3rd of May, Monday the 3rd of May, and we're going to do a market analysis, and I'm just going to show you a different approach to looking at the market. And as you know, I love this 360-degree market indicator. You can do all kinds of things. I've only got the RSI loaded at the moment, but I think there's 8 or 9 indicators that you can load on the same basis. There's also a whole lot of currency strength information, but I'm isolating the RSI one because I want to show you some elements that is of interest. Now, firstly, before we go into that, why do we do market analysis? We do market analysis because we want to find deals, as simple as that. So, and the deals that you find will depend on what kind of trader you are. Now, there are two basic types of traders. There is the with the trend breakout type of trader, and then there is the retracement or retractement or the bounce trader that believes that the market will turn and go against the trend. The other trader believes that the market will continue in the direction of the trend. Very important, because that is what makes the market. That's why the prices go up and down all the time. There are people that believe the trend should end, and there are people that believe the trend should continue, and that's what makes the market move smoothly. People have different opinions. So if you spot a trend and you're with a trend trader, you believe that the trend will continue. And if you are an against the trend trader, you would believe that the trend will change. And that is why it's important to know which currencies are trending and which ones are not trending, and what you can do about that. So let's have a look at the RSI and how it can help you decipher what is happening in the market. And on this particular one, I've got the 1 hour, 4 hour, daily and weekly set, but I personally love the 4 hour because that tells me a good balance of what is happening in the market right now. The 1 hour I find sometimes is a little bit too sensitive. The 4 hours good, and the daily is a little bit slow for me, so I love the 4 hour. Now, here are all the 4 hour readings for a whole range of currencies. So the first thing I would do is I would sort these readings, and I do that by clicking on the 4 hour heading, and it will automatically sort the currencies into high RSI readings and low RSI readings. Now, why do I want to do that? Because the high readings show that there's a trend in place and it's going up. And the low readings down here show that there's a trend in place and it's going down. So immediately I know which currencies are trending and which currencies are not trending. Also, I have set special colors to show me which ones are trending very strongly. You can see everything under 15 has got an orange color. Those are all trending very strongly. And the lime color is for all of those trending very strongly for high readings. And so immediately I can see which ones are trending strongly, and which ones are trending mildly. And then in the middle here are the ones that aren't trending. So if you those ones are possibly less tradable. So now the thing is, if you are with a trend trader, you would be buying these, and if you were with a trend trader, you'd be selling these. If you were a retracement trader, you would be looking at retracement opportunities for these oversold and overbought currencies. So that's the big difference, and that is why market analysis is so important, because you're in the end looking for a deal, and the deal that you're looking for depends on your philosophy and your way of trading. Now, as I said, I'm a retracement trader, so I look for retracements, and others are with the trend traders, so they look at continuation trades. what I also like about this is that you can actually go directly into the currency by clicking on that reading. So let's go and have a look at the CAD franc. Click on that, and there it brings up the CAD franc immediately. But it tells you, go and change the reading, because the actual reading should be 4, not 14. So you go there and you change it to 4, and you go to the end of the chart, and there you are. There you can see this huge trend going up as the table has told us. There we are, 95. There's the reading, 95. It's going up like crazy. And as a trader, you now need to decide, are you going to trade the continuation of this trade, or are you going to trade the reversal? Now, I can tell you now straight away, very quickly, here's clearly the signals. If the price breaks through that lower trend line, that would be a reversal signal, and you could then sell that. And if the price makes a new high up there, you could buy it. So there's the signals for with the trend trading and against the trend trading. So let's have a look. That was top buy one. Here is an amazing reading. I don't think I've ever seen a reading so low for a long time. And again, I click on the chart. I change the RSI to what it should be. I like 4. And we then go to the end of the chart to see what's going on. And again, you have this extreme reading. I mean, this is just unbelievable reading here. And again, let's see what we can do here. So I would say here that a new low, if it breaks that line, would be a sell signal for a with a trend trader, and then a break of that trend line would be a buy signal for against the trend traders or bounce traders. So trading is not that complicated, quite honestly it's not. And also you can confirm the signal by using trend lines on your RSI. So again, if the RSI breaks that trend line, that would be a buy signal. That's an alternative signal that you can use. So now you know how to find buy and sell signals using the RSI indicator, sorting it like that, and then analyzing the charts as I've just shown you. And the beauty is, as I've said, you can actually click on both sides. Now, another interesting thing that I often look at is, if you look here, where you've got the CAD franc very overbought, which means, and I'm going to take the example of with a trend trader, you would buy the CAD and you sell the franc if you want to buy this one. But if you look down here, you look that the franc is also a very oversold currency when compared to the pound. So in this instance, you would buy the pound. So can you see here, you are selling the franc. You're buying the CAD and selling the franc. And here you are selling the pound and buying the franc. So you have two opposite readings that you're getting. So there is almost a hedge environment that you've set here. So you could either buy both these currencies, the CAD franc and the pound franc, or you could sell both, and by doing that you would be hedging your transaction. Well, there are three alternatives that can happen. Both can go negative, both can go positive, and the one can go positive and the other one can go positive. So there's those three outcomes that you need to consider when making that kind of decision. But I just point out to you that it is possible for a currency to be overbought and oversold at the same time, and a lot of traders take advantage of that to create lower risk hedge type of transactions. So I hope you found this market analysis interesting. There are the trending overbought currencies. There are the trending oversold currencies, and you can decide by going to each chart which way you want to trade them. As I've shown you, it's a case of almost just straddling those highly overbought exceptional. These 421 are exceptional readings, and that 96 is exceptional reading. By straddling that on a continuation or a reversal basis, you could enter deals on a very simplified basis. Again, forex trading needn't be rocket science. You can do it on a very simple basis. You don't need to know the direction. If you straddle those kind of things, the market will tell you which direction it wants to trade. Okay, I hope you found this market analysis interesting. And from me, Alex Deploy, cheerio.